Greetings all, Ben here from East West. Just going to take a look at uranium as we do each week, and quite the week. So we had the Cameco price earnings announcements come out, and that has caused a bit of friction in the market in the short term at the very least, and that obviously has some implications for where we sit. But let's look at the details here, and I think I'll start off by just having a look at how the analysts have taken that Cameco news, because obviously whatever Cameco does, it's the leader, it's the big one. You know, it's the most heavily weighted share in the ETFs. It's going to have ripple effects across the space. So let's take a look. So just taking a look across sort of what the analysts have sort of said. By the look of it, you know, the general theme here seems to be, you know, that everything's all right in the long term, that this is just a bit of a short-term price shock, which, you know, if that's true, then of course, you know, we could be looking at what could be quite a good entry point. Remains to be seen, but we'll have a look at some of the connotations with that. But like I said, as you read through these, and I don't know if you may not have access to this, but if you don't, then maybe just pause the video. You can just sort of read through what's being said here, but there's nothing too untoward. And even looking at these price targets, that there's certainly all Cantor Fitzgerald's maybe a little bit lower, but they're certainly all still around that. I mean, 8 Capital's up at $80, which is quite high, but you know, around that $70 mark, which we've kind of looked at before. And then I was just looking at this RBC statement, but you know, I think this last line looks like it sums up the general feeling around the market that, you know, it was still a solid quarter and outlook, strong long-term guide on Westinghouse is good. The fundamentals on the uranium market are good. See this latest move as a good entry point given still strong fundamentals for Cameco and uranium. So that looks like the general idea. So I think last week I probably did myself a bit of a disservice and said that I don't have much for long-term uranium holders. Well, maybe that's not quite true. I mean, I don't want you to turn off and unsubscribe, not watch anymore, because I'm going to now look at the trends on a bigger basis. So I'm just going to do, this is really, it's pretty basic stuff. So what I'll do is I'll just quickly run through a textbook example of how I'm going to analyze the trends, which, you know, it's very straightforward, nothing there you can't do yourself. And then we'll apply that sort of same idea to some of the names that we can see out there, including Cameco, and see what we can see what sort of things we can deduce. So let's just do a quick textbook run through of trend analysis. So what's the very basics of a trend? Well, of course, we need to start with a rally, then we need a pullback, and then we need another rally that breaks the top, and then we've got the start of a trend, and then if we get another pullback, and then we get another rally that breaks the top again, well, then we're looking at this going, okay, well, now we can draw a trend line. So we can put in a trend line where we've got these swinging pivot lows that connect everything up, and we can see that we're getting a series of higher highs and higher lows. Very straightforward. So as we keep stepping through, we hit the trend line again, and we know that we've now got 3 touches. That becomes quite a good trend. But then what happens? Eventually all trends end eventually. So the way I like to think about a trend is like this. Riding a trend is like jumping in a car, pointing it down the freeway. Okay, the car's got no fuel gauge, and you don't know how much petrol's in the tank. So all you can do is keep driving the car until the petrol runs out. But we don't know when the petrol's going to run out, so we don't know how long the car's going to go down the road, i.e. we don't know how long the trend's going to go on for. So what we do as technicians is we start to try to zero in on any sort of sign. Okay, so if you're driving the car, you're zeroing in on any sort of sign that the engine might be giving that it's running out of petrol. Maybe it starts missing, or, you know, heaven forbid it starts bunny hopping, because that's when you're truly out of gas. But you're looking and listening for any sort of sign to tell you that the petrol is just about empty, because you don't have a petrol gauge, so you don't know how far it's going to go on. It's the same thing with a trend. Okay, we don't know how far the trend's going to go on. We just start watching for little signs that perhaps the trend is running out of steam. Now, when you sort of look at this scenario, you know, just a classic textbook scenario of a trend, well, when you start getting a pivot, what looks like a pivot, that is lower, of course, this is very simple stuff, that is lower than the previous high, well, then you know you've got a problem. Okay, you know that something's going on here on a very basic sense. And of course, what is the ultimate sign that the trend has failed? Well, you start getting a down leg that goes through your trend line. At this point, you're going, okay, what have I got here? I've got a lower high, and now I've got a lower low because we've now come down and broken this pivot. Okay, 101, very simple. Probably don't need me to tell you that. So of course, within this, there's also, you know, the other sort of structures where you could start to get things like, you know, head and shoulder patterns where you've got, you know, a higher high, the highest high, a shoulder, head, shoulder. I mean, obviously the interplay through the bottom here of a neckline is different, but the connotations are the same, that the market is beginning to fail to swing higher than its last high. Very simple again, straightforward, 101. But what else can we do within these trends to help us recognize when a trend may be losing steam just on a very basic level? Well, I would just be measuring what one thing you can do, and this is not a secret. It's not the 11 secret herbs and spices. It's pretty well known. You should just measure the length and time of the swings. So in this case, what were the swings telling us? Well, let's say this one went for 15 bars, was 13%. This one went for 16 bars, was longer at 17%. It's a stronger upswing. This one went for only 7 bars, was 14%. So all of a sudden, even though you can see this trend still looks really good and everything's still in place, this upswing didn't quite go as hard as this upswing. It was shorter in terms of time and price. And then the next one, of course, only went 7.5% up and only went on for 3 bars. Okay, or you could even look at the days, but you know, this is just a textbook example. So what we can see here is that we've got shortening upswings in the trend, which is just signifying that the trend is running out of gas. Now we can do the same thing for the pullbacks. So what we can see in the pullbacks is this pullback went for 10 bars, it was 6%. Now as the trend is strengthening, of course, up here, this pullback, even though it was this was 6%, this went 10%, but it was only 6 bars. So the sellers didn't have much of a control over this downswing because the buyers are still really in control. Okay, and then what happened? Then we had a slightly shorter upswing, even though it was another trending leg up. It just lacked a bit of the strength of this one. And then what happened here? Then this one, the sellers had more time and control before finally we had the last push that failed. And then, of course, we broke the trend line, and this starts to happen, and the trend starts to fail. So what else can we see? Well, just on a very basic sense, of course, the other thing we got here was a rounding sort of top, which is, you know, just feeds into that sort of head and shoulder where a high, a higher high, and then a lower high. Okay, so you know, this is just very basic stuff. So once we see this sort of pattern in the market where we think a trend has failed, well, what do we think happens next? Well, in a very broad sense, I think there's 3 possible paths to price. So we can get either a very sharp correction, like that you know will just be a very, very steep trend. Okay, we will have, you know, a very sort of steep trend line coming in here where, you know, it's panic and it's capitulation. It's a very strong sell-off. You know, that has very little bounces. You know, that's just it's not about correcting time. It's just about correcting price very quickly. I think this is the least possible scenario for the uranium market. I mean, it can never be ruled out, but I think this is the least possible. We could also get more a price and time styled scenario. So, you know, where we actually do put it, and then everything that we've examined going up here becomes applicable on the way back down, where we get the low, you know, and then all of a sudden we get a higher low, and then we break through, and then we're on to the next trend up. And what we've just had then, of course, is just the trend of a different degree. Okay, so that would be more a price and time. So if we're seeing more of this slower trend down, then that's when we would be thinking more about, you know, retracements. Are we coming back down into the retracement zone, looking at some old sort of pivots, resistance becomes support? Are we going to become support again? That sort of thing. Okay, so that is it is a possibility, but I think the fundamentals don't support a correction that's going to be terribly deep. So that would leave us with the third possibility, and that, of course, would just be the flat correction, where we don't really go anywhere. We just start to trade more or less. We're now starting to trade in a broad sort of range where we're not really going anywhere. And when we start to get into this sort of pattern on a bigger, that's when we can start to think, okay, well, now I've got no trend, so now I'm going to start to think about accumulation and distribution patterns. Now, in this case, in uranium, now, if we're going to correct on a more major basis, this would be probably my favoured scenario. We're going to get this sort of flat period where we don't really go anywhere. We just maintain the price that we've got, and then we would think about accumulation and distribution. But I would be looking for an accumulation where that would be the sort of spring, and then we start to trend out of that. So with all that 101 about trends that you probably already know about being said, I think we're probably, these become the crucial moments. I think this becomes where the trend is tested and set. Okay, I think we're at one of these points at the moment, at least in Cameco. Okay, so the power of the next upswing is something to pay attention to, not just on a daily, but on a weekly, maybe not so much a monthly at this stage, but the connotations of the testing of the trend line are just in place as we sit here this week. So let's just look here at URA. We're on a weekly. Okay, I think this is pretty much the trend line of best fit. So what I'm going to do first is I'm just going to bring in this little indicator that I've been building. Now I haven't finished this; it's still under construction. So when it's done, I'm going to release it on TradingView. But all I'm really doing is I'm just looking at the pivots, okay, and just connecting the higher highs and higher lows. So it just gives us the idea of the trend. So what I've done here is I've just used this, and then this is why I haven't finished the indicator, because the indicator is basically going to give us all this information. Something's a little bit readable. So we can just sort of see here that, coming off this sort of the start of the swing here, 13 days for this upswing, 21 days for that downswing, 84 days. But what I'm getting at here is you can see the swings in terms of their time, even though, it's kind of, this was a 40% swing, this was a 23% swing. Now we've had, this swing's ongoing. At this point, this is the high here at the end of January, but we're yet to confirm a pivot high there, of course, because I'm not going to get into the ins and outs of that. But once that pivot high confirms, unless of course we break through the top here, then this pivot would go on. But the point remains is that, remember in that example we're looking at, is that this is starting to swing less strongly than it was. So the downswings, I wouldn't have said, are necessarily gaining. They're not as prevalent, but certainly the size of the upswings are contracting in terms of time and price. Okay, so just thinking about this quickly on a weekly, the indicators aren't, and this is the thing, right? Because on the weekly we're still ongoing, and what you would expect here is that we need, if we get a week low, next week. So if the high is less than this week, then what will happen is the indicator will join this up as the next pivot high, and then of course we'll next look for the next pivot low. So right now, we are at the point where the trend and the swing is still intact, and this becomes obviously important. So any breakdown of this trend line through here, this is just 101, right? Any sort of breakdown of this trend line through here becomes problematic. But the indicators aren't really telling us that there's much of a problem. This RSI, this is a little bit of a problem, because the RSI, right, is just a momentum indicator. So it is just warning that momentum's running out. But the strength of trend on a weekly on the ADX sitting at 45 is still showing that, yes, there's still enough strength intact. The MACD's gone flat, which is just probably starting to tell us that, because the market's been tracking sideways here, that we're out of momentum a little bit. but obviously with Cameco, that's going to be the driver going forward. But if we change this now down to a daily, the swings do remain intact because up we've got a 3 swing, down to correct, we've gone up. Now it looks like we're going to get. It looks like this will turn into a secondary pivot. So that means that there'll be another. The next pivot up will be lower than this. So this will become more a major pivot, this high here. But the ingredients are kind of there to now come down and test. This will be important, but to come down and basically test through here. So that's why that price there remains pretty crucial going forward, just in terms of holding the structure. But the other thing too is that the RSI, it's basically it's got above 60. I mean, but it's kind of starting to turn over into more a bearish sort of cycle in terms of this. Now, the other problem here is the daily ADX is now at 15. So what that would mean for this plus everything else is, because the trend is just being flat to sideways now, it's probably just taking a bit of interest away from sort of hot money flowing into the market. There's probably just a little bit less to drive this because the trend's not there on the daily. So I mean, the problem on the flip side is that this does turn into a bit more of a bearish scenario, is that we could experience a bit of a bigger correction. We could be headed for more of a 3-wave downswing like that. That's going to, well, we don't want to threaten this. This could be under threat, but ultimately I think that this is going to be the main pivot to worry about. But obviously breaking that trend line is going to be something to keep an eye on. So you can sort of see how, just on that basic textbook example that we looked at, how this is kind of important too. And even though we're not at that point, because in the textbook scenario we already got to the point where we've done that, I don't think, I'm not sure that's going to happen, of course, but that would be what we're looking for this major trend to finish. Okay, this trend to finish, and if it does, that's not necessarily a problem. It just maybe it just means we get an extended sort of correction, and then we can go on for the next run. Okay, so it remains to be seen, of course, but that is just the warning shot that we're looking at. So URNM a little bit different here, in so much as the last leg has actually exploded further than this leg. Okay, but we're still short of this big leg. So this one went for 84 days. We're on day 49. If this turns out to be a more major pivot, so that we need a few more weeks for that to go by. So a little bit different, and we're a little bit further away from the trend line here. So we're just waiting for the next pivot confirmation, which should drag the line up to here. And you can actually see on a daily, you would probably bring that pivot there, and then we've got what would be another small down corrective pivot. But then, of course, this becomes the warning shot, because 35 days, this upswing here, which would probably turn into a major pivot, because that'll be a higher high than we'll get, probably a lower high on the swing. Then that becomes a bit more problematic, because that starts to look like that scenario we're looking at in the general textbook scenario. So, like I said, there's a long way to go here, and probably down here. These two pivots there, that they would be the important ones. So this is just real basic chart reading. I mean, it's just those would be the two zones that you'd be concerned about. You just don't want a smaller swing. Well, smaller swing patterns like this correction, a 3-leg swing pattern going in like that. That's fine. But what I'm suggesting is that what we probably don't want to see now is a 3-leg swing pattern that's bigger than this one, that comes down further and even takes out and starts challenging that. So they're just the things to watch. I'm not saying that's what's going to happen. What I'm saying is they're the things to watch. That's the sign of the engine cutting out, that the petrol tank's really empty, and that's the only way we're going to know. So once again, looking at this on a weekly, I mean, we do still have the long-term divergence in the RSI, but the MACD is still chugging along. It's not even though this is now starting to struggle a little bit over the last 4 weeks in terms of just a bit of sideways chop. That's just taking a bit of momentum away from the market. But also we've got the ADX just starting to very slightly diverge, just showing that the trend is weakening. This main trend is what I'm talking about. We're yet to put in the next pivot. We're yet to confirm the next pivot, but that should happen in the next couple of weeks, which of course will then start to plot us up to here, and then it'll be a question of how much deeper does the next downturn come, and will it hold the trend line? Ideally, we want to see that before we do that again, but that remains to be seen. So just on quickly on a daily sort of thing, the RSI is, it's still holding. It's in no man's land, which is what you kind of expect, right? Because we don't have much of a trend going in here, which is what the ADX is telling you. Once it's below 20, there's no trend in the market. It's flat. So of course, like I said, we've got the three-legged swing here. I'm just repeating what I was saying, but what we don't want is a three-legged swing down like that breaks through here and has a bigger price range and more time, because it just means that the sellers would be starting to get an upper hand. And if that becomes the case, because maybe this is a distribution pattern going in here, but maybe we'll look at that next week. But if that becomes the case, then we have to start looking at the overall picture, going, okay, now it looks like we're going into the correction. What it looks like is this main trend is over for now, and then we start to think about, okay, well, how far are we going to correct? What sort of correction are we going to have? How do we mentally prepare ourselves to ride out the correction without pressing the button, and then riding the next leg of the trend? Okay, same thing here, URNJ. You can just see the swings, not so much the down swings, but you can just see on this weekly that the swings are getting kind of smaller, right, as we go. I mean, this went further, of course, because of this massive rip up. This went further in terms of price, but time-wise, it's steeper. So this looks a little bit further away from that trend, but we're just obviously on this weekly now. We're just waiting for next week before that confirms as the next pivot, I think. So this still looks okay on the big picture. But it's just all the same connotations. I mean, the markets are all basically doing the same sort of thing, but we just wait to see what happens next in terms of the underlying daily price swings. So there's not really much to look at here in terms of the in terms of the indicators on this one, because obviously we don't have the history. But the same thing applies. We're just waiting for this swing to come in. And then we just want to see what's going to happen underneath the surface, if we're going to hit like that and then continue on, or if if this trend is going to fail and we're going to go into a bigger correction. So same thing as we zoom in here on the daily. We've got a signal cross here in the MACD, here's divergence through the MACD. You can see here we made the higher high up here, but the indicators failed to go on with it, and now we've got the cross. The RSI diverged between these two peaks, and the trend is just starting to run out, even though it is still intact. But just look at the swing pattern. I mean, here's just the three-wave correction, another rally up to a pivot. We're yet to confirm anything in here, but are we going to get another three-wave that comes and takes this out? I think probably down here is more the main pivot, and that of course is going to tie into some sort of challenge of the trend line. So we're a fair way away, but like I said, that would just be the kind of thing that we'd watch, the same as everything else, just kind of watch how that develops. Okay, CCJ. So we're moving into more of the individual names, and obviously this one's the crucial one, but you can see that 56 days, then 84 days, 84 days, but bigger, 77 days, smaller, and this one, the thing about this one is I think this will prove to be the overall pivot, this one here, because it's a little bit higher. But we've got there's some interesting stuff going on here, right? Because we've got almost the triple top around about just around that psychological $50 mark, and this swing is definitely smaller. So that contracting swing pattern is unfolding. But what's interesting, because when you look at this one, is we are now on that trend channel. Okay, so this, I think, is going to be our driver. So we can just see we've had the correction, but this is where it's a little bit problematic, because that has given way, even though the main pivot is this one, okay, and that's still a fair way down. I mean, that's still down, $40, but the problem here is that we start losing this trend channel, and we've held this trend channel for quite a while. Then all of a sudden, remember what we're saying, we might start getting that bigger swing that's bigger than this swing, and it's starting to show us that the sellers are dominating the market. So even though that remains to be seen, you can just see that here in this one in Cameco that the situation is more pronounced, which isn't to say that I'm predicting that this is what's going to happen. Okay, all it is that we're just at a more crucial point where this trend is being tested. Okay, this might turn out to be the pivot. Okay, and what we've actually got here is more of a flatter correction, and this would tie in more to the Elliott wave outlook, which I'm not going to look at this week. I'm just going to see how this unfolds. But there is an Elliott pattern to suggest that this is a leg up, and that we've got a flat correction, and we hit this trend, and then we start going on the next trend leg higher. Now, what we would want to see, of course, is that this trend leg higher would be greater than this one. Okay, so I don't think that's going to be a huge stretch if it eventuates. But like I said, we're just more at an inflection point here than some of the others. But it's the leader, right? Because if this gives way, then a lot of because of the heavy weighting of CCJ through the other ETFs, it's going to make the market sag. So we watch and see what goes on here. Now, the only thing that's kind of saved this to a degree is that this high was actually higher than these two, because, but like I said, I mean that when you start to look at this area in here, I mean it's pretty close to a triple top, right? I mean it's at $51.08, $51.21, $51.33. Like they're very, very close. It's very close to a triple top on the daily, and of course on the weekly it looks like it's there as well. So now that we've sort of lost this little support level, and now that we're just into this process of swinging down, now what I'm kind of, I'd say anxious but watching is, we've had some pretty clear signs of divergence that's starting to play out a bit more now here on the daily, and we're starting to lose this low. So we just need to see if the market fights back next week. But if it starts to go down, then we start losing some of these pivots. We start losing this one particularly, that I pointed out. I'd be a little bit more concerned about the near-term outlook, because what the ADX is the other pointer, right? Because what it means is this could turn back up. Doesn't mean we're rallying, but if this starts turning back up, of course, as price starts turning down, it just means that the trend down is starting to strengthen. Okay, then we've just had, this MACD is really starting to slip away. So we just have to be very cautious and very wary here. Like I said, I think if any correction that comes through, I think it's going to be more of a flat one, but that just might mean that you're going to have to cool your jets and bide your time and grind your teeth a little bit on more sideways correction. But we can only really worry about that if it starts eventuating. And if it does, then we start to look at the connotations. But that's how we see it, right? You can just see this swing pattern starting to develop potentially here. Good old Denison. Haven't looked at it for a long time. Same sort of thing. I mean, this leg was a little bit harder, but it's pretty flat. So, and I've just taken a sort of trend line of best fit here, so it's not exact, but I think that's the general premise of what's going on. But we're on a weekly here, of course, but you can see the same thing, that this was the main swing, 56% in 84 days. The next swing was 42 days, only 33%, and as this one sits for only 21 days, and we're about the same as this, but it was quicker. Okay, so I think this will probably turn out to be the pivot, but we need a little bit more water to go under the bridge. But we didn't quite get the same structure, and this is the problem. These ones, the structures of them don't fill out as well. I talked about a three-wave correction. This is a more complex correction down here to the main major pivot. But what we could easily see here is that this maintains. I mean, if everything starts bouncing this week, we might start to get that. Okay, and then within this, what it'll mean is that this major upswing's not finished yet, and we'll probably go on further. But right now, I'm just pinning it sort of. Well, you could pin it there, but on the weekly, I'm just going to leave it there. But that contracting pattern is evident. So we wait and see, of course, but of course it just becomes about the obvious pivots being that one, and then the main pivot being this one, coupled with the trend line. Do we hold? And does the next swing down start to become, well, we might have to make a decision about this as whether or not we're actually going to tighten this up into another swing here, another swing down, another swing up. But if we do, that would be even worse, I'd suggest, because that is really showing that the swing pattern is contracting. So just, quickly looking at the weeklies, the only thing that's really of concern is the RSI dribbling off and starting to shy. Well, it hasn't been under and shied away from 60 yet. But you can see the pattern going here. This looks like it's probably going to be another swing. So then it'll just be a question of if is the next swing down. It doesn't necessarily have to be that, but this would be obviously the scenario that becomes problematic. So like I said, it's like Cameco's the one that's more kind of asking the question because it's on the trend, whereas a lot of the other ones are kind of a bit away from it. So, but the problem is, of course, if Cameco rolls over, then, well, look, hey, maybe just because Cameco rolls over, that some of these other ones, the junior miners are going to become more attractive, and that the money pours into them, and they don't break down, and they start to, that their trend continues on. So, that remains to be seen. It's probably a bit more of a spread analysis type of thing, but we can look at that over time. But as we sit, that's just where we're sitting on the weekly look at the indicators, and when we come into the daily, it's kind of the same thing, right? I mean, we've still got this going in. It's still okay. If this gives way, then I would suggest that I wouldn't be. I'll put it this way: I wouldn't be worried if that this gives way, because I'd probably be looking at this as maybe a three-legged correction, but then you would just want the next pivot high to start coming through here, because if the next pivot high fails and we start doing that, then I don't have to tell you what that means. UEC, the main swing leg, 70 days, 100%. The next swing leg was 70 days, was only 48%, so maybe that's to be expected because the market's going up. But this swing leg currently 27 days, only 34%. So, you can say that in terms of time, we're starting to contract. But again, we're a little bit away from the trend line itself. However, of course, we do have this sort of sideways action that's going in, which is going to start to weigh on things somewhat. But, on a longer term, this RSI is battling to go any higher, which that just means that we're at sort of maximum, to me at least, it means that we're at maximum velocity. So I don't know, of course. Maybe we've got a bit of a distribution pattern going on in here that will require some closer examination, which I have not done yet. We do have this sort of triple top or double top sort of around this $8.30 mark. But we just need another week or two to complete what would be the next swing. So, same thing. How far down is the next correction? Is it through the trend line? Does it break this pivot low? Remains to be seen. But the ADX is starting to fail, which we would expect with this sort of price action, because that is just starting to dampen out the strength of the trend. But the MACD is still holding in there, even though the histogram is bleeding off, which basically means that the distance between the two moving averages is starting to tighten in, but we don't have any sort of crossover action there as yet. So even just looking at the daily, I mean, obviously the fact that we're sort of going a bit sideways here is dampening the trend off. We don't have a trend in the market currently. The RSI, of course, has tailed away between this peak. Is this peak higher? Yeah, it is. So there is divergence there, a local divergence on a daily. So we do have, even though we've got a higher pivot here, so what that would mean is this is going to become more a major pivot. I think if we get what we'd expect is that the next pivot high would be lower. If that pivot high comes in lower, then this becomes more a secondary pivot. But you can see the same thing. I'm starting to repeat myself here because it is the same pattern. Okay, so we've gone higher here. So now the question is this swing low going to give way? Because if it does, what does that mean? Well, then we're just back here looking at sort of some of these more major pivots, which I would put probably at this one. coupled with the trend line, and that just feeds into the overall picture. But you get the point at this stage, because this video is going a fair bit longer than I wanted it to. But seeing as how we've gone this far, we may as well go all the way, and we'll look at NXE, and the same thing is happening. This last potential pivot high here is starting to shorten out. The swings are starting to shorten out. They're dampening off. It is just a warning shot. You know, it's maybe just the engine just starting to make a little ticking sound that, you know, maybe the carb's starting to suck dry, or, you know, take the car analogy, it's kind of that scenario. Again, we've got a bit of room to you know, in terms of getting to the trend line, but it still remains intact here on a weekly. It's still okay. So for those following NXE, there's probably something just a little bit here that could be warning us just on the MACD. So you can see here that, you know, are we going to get, is this low on the MACD going to give way? And then we've got a bit of a MACD trend going on there, right? And that then going to tie in, because this pivot's higher. So, you know, it then just becomes, where does this stop? Does it get below this last little pivot? Okay. Or does it hold the line? Okay. Does it not break the swing structure here? And can it just bounce back up, make a higher high, and then on we go? So the indicators are sort of telling us that that looks less likely. But the indicators are not the be all and end all, right? The trend is just weakened off here. So, you know, the same thing, this would remain my major pivot, and this is the first warning shot. But, you know, I'm not concerned if this gives way necessarily. I'm concerned if the next swing doesn't make it back to there, and then that sort of thing eventuates. At that point in time, I think we could safely say that that is the end of the trend, my friend. This is the end of the trend, my friend. So, you know, and like I said, if the trend does end, doesn't necessarily mean the market's going to crash. Just might mean that we're going to go into a long sideways consolidation. That is yet to be seen. I'm going to leave it there because this has gone on far too long. Don't forget to hit like and subscribe, and I'll see you next week with hopefully something a bit shorter. Bye for now.